Good morning, good morning. How's everyone doing? Good to see you all. What's up, Angelo? How you doing, man? To kick things off, this stream is kindly sponsored by Bitunix. If you haven't already, I highly recommend moving your trading margin over to their exchange. It's a decent exchange, got very good functionality. And by clicking on the link in the description, you can enjoy a 30% rebate, which means that if you deposit 100 USDT, you get 30 USDT Futures Bonus. If you deposit 500, you get 150. And if you deposit 1,000, you get 300 USDT Futures Bonus. Essentially, what this means is you're getting free trading margin to play around with, guys. It is a no-brainer. And if you haven't done so already, I highly recommend jumping on this because it's a deal that will not last forever. Okay? Yeah, nice to hear it, Angela. Nice to hear it, man. Okay, cool. So let's get into the charts. Lots to get into, guys. There is lots to talk about. Let's kick things off with BTC. Okay, so I think it's opportune to actually talk about the monthly, considering our recent close, okay, and the fact that we're now in October. Let me just clean this up a little bit for you guys, so you can see it a bit clearer. Okay, so we can actually just scrap everything here, okay, and we'll redraw and reapply our zones and levels. So first off, as we've spoken about at length over the last few months, we have this potential RSI divergence in play on the monthly, but only across the RSI, okay, and not across the awesome oscillator, as the awesome oscillator is making higher highs the same as price, okay? So higher highs on the AO, higher highs on price. And the only oscillator that's diverging is the RSI with lower highs printing here, okay? This does not mean that a divergence is going to lock in, okay? We're just simply analyzing the markets, reading what's happening at face value. As we know, double divergences are much more powerful than isolated divergences, i.e. you want both of these to be locking in lower highs, not just one of them. To give a good example, you can see here, okay, lower highs, right? Price, high highs, and that basically capped us in 2021 and marked the top, okay? So the fact that we don't have that awesome oscillator divergence is a good sign on the monthly, and this could simply rip from here and completely invalidate this divergence as well, which means that, you know, it's not a locked-in divergence, it's only a potential divergence, and things can change from here. Okay, so down to weekly. Weekly, I posted about yesterday, I think, and it's in incredibly good stead. Okay, so we're looking extremely healthy here on the weekly. Reason being, we have tapped into weekly demand here. Right, we've been speaking about this demand zone for weeks and weeks now. Okay, you can see just how well it's held up. Okay, so ever since this sort of area here, we were talking about the fact that we're hovering just above weekly demand, and we're looking for price to continue the trend, tap into demand, and show some reaction from that zone, which we have here in plain sight. Okay, the demand zone is one thing, fine. The other extremely bullish signal about where we are at the moment in terms of the nature of momentum. When we speak about momentum, we're talking about overextensions, we're talking about resets, we're talking about the dynamics in the RSI oscillator. And you can see here that we are incredibly well poised as we come down to, we came down to 53s. Okay, so anything between 45 and 55 is a technical reset in my book. So we've come down, we've reset, what happened up here. We came up to 70, came down to reset. Now we're pushing away in harmony with that tap into demand. Okay, so just looks great. Okay, this is just such a beautiful higher time frame chart. The fact that we saw such a clean reaction from intra demand here is everything we wanted to see. It's fed nicely into some of the altcoin longs that I'm in as well. Been very good supplementary confluence for trend riding in this market. And again, time and time again, the markets have been trading super cleanly, right? So if you look at both BTC and ETH, I'm not gonna stop the top-down analysis here on BTC, but just for demonstration purposes, if I put across my ETH chart from my other monitor here as well, look at these reactions, okay? So this tapped down into 3-day demand here, intra-demand, okay? So when we're talking about intra-demand, we're talking about a cluster of back and forwards price action. Angelo, I know you're watching this. We picked up on something in the Discord the other day. Angelo posted it was actually here on the 4-hour, wasn't it? We're talking about was it the 4-hour? Yeah, so we're talking about this zone in here. Angelo posted this as demand, okay, and said, is this good enough for demand? It's not, because that's just one candle, okay, of the opposing color. We don't really like this, okay? We want a little bit more back and forth, okay? We want to see a few candles in the opposing color, and we want to see these clusters made, okay? So when you're looking to join trends, using intra-demand zones or intra-supply zones, if we're in downtrends, are some of the most powerful and responsible ways to join those trends, okay? You're not FOMOing up here, okay, as price breaks out, you know, hovering underneath all-time highs. You're waiting for price to come down to your levels or zones, in this case zones, and you're looking for reasonable pieces of confluence to come together to then ride that trend to the upside and continue riding that trend, okay? So just to note that if you're not using supply and demand as one of your most integral pieces of price action in terms of left side price action, when I mean left side price action, I mean as price comes in, you're using a level or zone that's occurred to the left side. Most people tend to turn to support and resistance for this. But for me, I've been harping on for the best part of 5-6 years now about how, for me, supply and demand is king over support and resistance, which at times is a controversial subject. But again, just going back to the weekly here on BTC and again the 3-day on ETH, and you can see just how clean these zones are in terms of reactions, okay? They have been, take it from someone who's done thousands of hours of backtesting, tens of thousands of hours of first-hand screen time and flight hours. Believe me when I say, if you're still using support and resistance as your main levels for interaction in terms of left side price action, pivot over to supply and demand, and I promise you'll start to see the results for yourself. Okay, they are, I think the thumbnail text for the supply and demand video in the trading course I have up on YouTube is the hidden zones, and they're mainly just the hidden zones, not because they're hard to analyze, they're very simple things that occur in the chart, but just because people just don't really tend to know about them that much, okay? And yeah, that's hugely erroneous, okay? These zones are pivotal points at which price action interacts, and yeah, can hugely simplify your trading, make things much less stressful, and also boost your performance at the same time. So please start paying attention to these zones. I have a full video in my YouTube if you'd like to look into these further if you don't quite know how to analyze them. Back to BTC. Okay, so weekly, we know the picture, right? Super strong, super healthy RSI resets into intra demand. Okay, very, very nice indeed. 3-day looking hella strong. All right, 3-day looking hella strong as well. Again, you can see interactions with that zone, slightly more granular, and a very, very strong push away over the last 3 days. Again, looking great. Okay, we're starting to see the sharpness of this move now onto the daily. Okay, and we're also starting to see that we're tipping into the 70s here on the daily time frame. So let's maybe look at 12. You can see that we're actually slightly more overextended up at the 76s, and also approaching this key swing high here. Okay, so we can mark this on now as well. Down to the 4, and also just a note, you can see the time frames that I'm focusing on. I do have the 10, 8, 6 hour, which I mainly just use for different divergences that could print on these time frames. But when I'm doing a top-down scan, it's very much monthly, weekly, 3-day, daily, and then I'll go 4 and 1 normally. Okay, so if you're ever doing a top-down analysis for yourself, I'd advocate focusing on those time frames. Okay, so now we're down to the 4. Okay, we're starting to see things a lot more granular here. Okay, and let's just go back to this demand zone. Yeah, so there's 2 ways you could have drawn the weekly demand here. One is from the wicks of the candles with the opposing color here. I had it previously drawn like this actually because there were some slightly outsized wicks here. And with this picture, you can see just how clean the interactions were going down to the 4 hour. Okay, so first tap in, strong reaction. We barely held in this demand zone, pushed away, came down, and it's just a few wicks. All right, we're holding here in this area and pushed away very, very aggressively, very strongly from this intra demand zone on the weekly. Okay, so yeah, basically the way we use these higher time frame zones is using them for confluence and then going down to the lower time frames to snipe entries. Now, looking at the 4 hour, we can see that this is a relatively inefficient move. Okay, it's a relatively inefficient move. What that means is that we've moved up with a lot of haste. Okay, we've moved up incredibly fast. Normally, what we would like to see for a more efficient move in price action is something a bit more akin to this. Okay, we want to see these stools in price. Okay, where in the video, in the trading course, I talk about energy points. Okay, so if you're thinking about price and price action in terms of, let's use the analogy of an athlete. Okay, so the start line is here. Okay, and let's say the finish line is here. Okay, just for argument's sake. So we're starting the race here. And we are finishing the race here. Now you can see that there's sort of a halfway point here, okay? And it's this point here, this key swing high. Now, this runner, let's say it's a runner, okay? We've started here and we're basically sprinting towards the finish line. The problem is, at this point, the runner is particularly exhausted. Let's say this key swing high, we could picture it as a hurdle, okay? And the runner has to jump over a relatively high hurdle in order to continue the race. Now, the fact that the runner has sprinted towards the hurdle means that that runner is exhausted, okay? And because the runner is exhausted, it is more likely that we will fail at that hurdle. In other words, SFP, swing fail, or deviate, okay? Now, the second runner or second athlete here has started, but he's taken pauses along the way, okay? So he's sprinted and then he started jogging, okay? Then slightly more high intensity and taking it easy, slightly more high intensity and taking it easy again. runner B is not exhausted. Okay, so by the time it comes to facing this hurdle, he has enough energy to jump over the hurdle and continue his path towards the finish line. Okay, so this is just a nice analogy that I want you guys to memorize when thinking about the way that price moves and the speed in which it does so. You want price to be moving fairly slowly and more efficiently, okay? If not, then all it does is it increases the probabilistic odds of a failure at that real first trouble point. In this case, it's this swing high here, okay? And it basically increases the odds of a swing fail occurring, a sweep occurring, and a failure in this region. Now, that's not to say that that's going to occur 100%, because what may occur in this area is this, okay? And if this occurs, then maybe that athlete has built up enough steam, enough energy to then, jump over that hurdle, properly overcome it, and do so with enough energy to then head towards the finish line. But if that's not the case and we simply go up from here, let's say we do so and also potentially lock in a divergence here on price, maybe something like this, then it's more likely that the market is not ready to advance to the finish line in this area of local price action anyway, okay? So yeah, just a quick analogy on the dynamics of speed, the dynamics of price, and what we're looking for in terms of inefficient versus efficient moves. You may hear those words thrown around a lot, inefficient versus efficient. But I find that sort of analogy of using energy points has been pretty integral and very, very useful in terms of my understanding of price over the years. And that's not to say that we won't do this 100%, okay? Because anything's possible in the markets, as we know. But also we're playing a game of understanding, we're playing a game of probabilities. And the probability is, if we approach a key high or key low with speed, is that we take out that high or low, sweep or deviate, and then reverse, or at the least consolidate until we can take out the high with more energy in the locker, okay? So the outcomes, if we were to take it out from this area directly here, would be we come down maybe into this pocket here of demand, okay? Maybe into this pocket here of demand, maybe take out the lows here, okay? So what will happen from that point is anyone's guess, okay? I'm not in the business of rubbing the crystal ball. I never have been. What I do is I react to price, okay? So when price moves into zones that have been well technically analyzed, then I jump into action. I see if there's anything I can do in terms of trend joining. I see if there's enough on the table in terms of confluence, and then I make my moves, okay? So if we were to sweep in this area, we could have a reaction here. We could have a reaction here. Or we could go down to take out these lows here. Considering we didn't do so on this move down, it was simply a tap into weekly demand. Okay, as you can see, this is an untapped low, an unswept low. Right, so this is just the way that I start thinking about the markets. Right, I'm thinking about inefficient versus efficient. I'm thinking about speed, and I'm thinking about levels if it is to come down and retest. As I said, we could simply consolidate in this area. I'm not in the business of predicting. Anything is still on the table. I'm just reading the market as I see it, okay, and getting ready for potential moves ahead. Now, please bake this into your mind, right? This analogy of energy points, because so many people focus on the what and the where, but they don't focus on the how, okay? I speak about this very often, okay? Even today in this stream, we focused on the what and the where, okay? Talking about the importance of supply and demand zones over SR zones. That is what we're focusing on and where we're focusing on them. But very, very, very few people focus on how we're focusing on these levels, okay? So how does price move into or interact with these levels or zones? Does it do so fast? Does it do so slowly? Does it do so efficiently or inefficiently? Okay, so these are all concepts that are very, very useful, and for some reason seem seldom spoken about unless we're talking about fairly advanced levels of trading, which is ridiculous because it should be one of the first things that we learn as traders, really and truly. Okay, so yeah, basically waiting for reactions in this area and to see what the next moves are for BTC. Okay, now let's move over to ETH. Monthly. Again, let's clean this up and do a fresh top down. Okay, monthly, of course, still looking strong, right, regardless of this recent red candle close. Weekly, more consolidation underneath all-time highs. Okay, so as we've spoken about multiple times in this area, we are just scratching at all-time highs. We are scratching at price discovery. And what we want to see in this area is consolidation. Okay, so if you go back to my live stream weeks ago when we were up here, I was saying, again, I was a bit concerned. Why was I concerned? Let's think about this in terms of energy dynamics. Let's think about this in terms of speed, inefficiency versus efficiency. It's exactly the same pattern that we're seeing from BTC, right? Hit the lows and then scorch up, okay? Yes, we put in some pockets of demand here, okay? So if you go down to the 3, you can see, again, we're speaking about this cluster here. And this cluster here. Okay, so not the most inefficient it could have been, right? Not the most inefficient, but even still, we want to see consolidation in this region. Give me a sec. And that's exactly what we've seen. Okay, so price hasn't gone on for that breakout and continuation into price discovery. Instead, what have we done? Okay, we've come down, we've tapped into the 3-day intra-demand zone here. And what else have we done? Okay, anyone that's been a good student of mine and has been well observing the concepts that I teach will know exactly what I'm looking at here. So I'll leave it up to the chat. What else has been very, very healthy in this area in terms of price action, in terms of the oscillators? S3 reset. You got it, right? You've got it. Okay, so, and what kind of reset S3? What kind of reset here? RSI, yeah, it's an RSI reset, but it's also an exact reset, okay? So whereas before I was talking about a tap into the 55 to 45 region, which is a technical reset in my books, okay? We are also looking at an exact reset, okay? So exact resets are incredibly powerful tools to join trends, number one. Number two, we know that the higher time frames equal higher validity, and we're looking at an exact reset on the 3-day, okay, which is one of the highest time frames that we look at. Number three, we also have a tap into 3-day intra-demand here, so we're operating in areas of very good left side price action, being this intra-demand zone. And number four, we're getting that consolidation prior to the breakout as well. Okay, so this here. This is all just consolidation prior to an upwards breakout in my books, okay? Obviously, again, not trying to rub the crystal ball, just a stab at what I think would happen here, considering the dynamics of price action. But we are looking incredibly healthy here. We are looking in amazing stead on ETH. And once you start sort of harmonizing these pictures together, okay? So we're looking at, I think, the strongest time frame for me on BTC was the weekly. What's going on with my charts? Yeah, so tap into demand, weekly resets. Again, not quite an exact reset, down to 53s, 52s, but very, very good. And we're looking at ETH on the 3-day. I'd say that's the primary time frame to look at on ETH. Considering this 3-day intra-demand zone, the fact that we tap down exact reset here, and you can see that consolidation underneath the breakout level of all-time highs, looking very, very clean here. So needless to say, off the back of these two high time frame pictures on the most important markets that we can look at in crypto, the general landscape is looking very good, looking very healthy, and well poised for upside. Okay. Daily, we can see that we tapped down to the 30 level here as we reacted with that 3-day zone. 12 went into overextensions, again into the 3-day zone. Now, if we go down to the 4s, we can see everything in a lot more detail. Okay, so here we have that all-time high breakout level, all-time highs. Here we have that 3-day intra-demand. And we came down and tapped into this level here. Okay, so all of this here is a range. Okay, so we take the first swing high to the first swing low. We have a basic range here as well. Now, last stream, we were hovering in and around this area here. Okay, so we'd tapped into the 3-day demand zone, and we were hovering underneath this range. And if you want to go back and visit it, if you haven't seen it already, the entire stream was basically around the concept of deviations and a potential deviation trade in this area. I.e., we have a very clean range to work with. We've tapped into higher time frame demand here. We also had this technically invalidated RSI divergence, but one that very much still caught my eye based on the structure and nature of it. Okay, very clean arc, didn't come too close to the resets, both peaks heavily overextended, double divergence confirmation across the RSI and the awesome oscillator. Okay, so still very, very much had piqued my interest here. The question was whether we take the trade, considering we are taking a potential deviation trade right into overhead supply here. And you can see the play out of that. Okay, so what I said yesterday on last week on stream was that if you were to take this trade, then you would have to do so once this supply zone had been technically invalidated. Okay. So what does technical invalidation mean? Right, it means a strong close into this zone. Okay, so I took a position. I did so here as we did so. Right, I placed my stop over here, chanced it with a relatively tight stop, and the reason I did so is because yes, we'd invalidated supply, but what we'd also done was create demand here. Okay, so I was using this demand zone as a buffer for my stop, okay, and chancing it with a relatively tight stop for my liking anyway, instead of going all the way down here and just completely skewing the R. Okay, I decided to take one here, slightly tighter stop, and run this higher. Okay, so yeah, just a note, a continuation from the executions that we were running through and mulling through, ruminating on in the last stream. Okay, in terms of potentially positioning into ETH and how to approach that trade. Okay, so for me, technical invalidation as soon as we get a candle close into that zone, good enough considering the whole picture that we had at hand. Move into demand, hovering underneath all-time highs, double divergence, extremely appetizing structure on the RSI, despite the RSI divergence being technically invalidated. A decision to bend my rules based on the strength of the trend. Okay, so if you want to dig into what I mean by that sentence, then please watch the last live stream where I go into it for about 40 minutes, I believe. Okay, so now let's take a look at the deltas. Right. So, BTC putting in a lot of positive delta in this area. Okay, so there was a good spike here, but this is a lot. Okay, now how do I explain this? So for those that don't know what I mean by delta dynamics, it's not just using negative delta to mark lows and positive delta to mark highs. It's looking a bit deeper into the delta templates and going, okay, cool, well, we've put in a delta cluster here. 3 bars, 3 consecutive bars of high volume positive delta, the third in relatively great measure. Now, yes, we could fail in this area, but looking at the hourly time frame, if we go down to the hourly here, you can see that price doesn't look too shabby. Okay, and we're also going into a weekend period, which will likely mean crab in this area, okay, for the next couple of days at least. Now, if we decide to crab and then from there push upwards and basically don't reject and move to the downside off the back of this delta cluster, then we're in very good stead, and it basically speaks to the strength of BTC. Okay, so yes, we can use negative delta to mark lows and positive delta to mark highs, but we also have to take into account the fact that if those delta clusters or isolated spikes do not mark the lows and highs, then we can basically label more strength on that market. Okay, that being said, because we are hovering underneath this swing high here as well, and we've approached the swing high with speed, we can weave this delta cluster into a potential theory that we may spike the highs, sweep SFP them, and at the least cool off, consolidate, at the worst enter into a bit of downside. Okay, because when looking at delta, we don't need to see delta occurring there and then per se. We can also use local delta within reason. What that means is if we were to come up, spike the highs, then we can attribute this delta cluster here as confluence to bolster a potential trade idea if we were to SFP and deviate. Okay, and this is a pretty significant cluster of delta. To add to this whole discussion, I very much prefer clusters of delta over isolated spikes. So this has again piqued my interest, and in harmony with the sort of speed dynamics of BTC, has me wary in this area. ETH, on the other hand, just looks very healthy. Okay, so we've got this uptrend, and ever since this point here, really on the 29th of September, it's been largely supported by negative delta. So a very, very different picture to BTC, and generally looking very healthy on the Ethereum side of things. I'm not just saying that because I'm long, but this is basically what we want to be seeing in terms of trend continuation. Okay, what this means is that every time we get some small dips down in price, we have limit bids that are just moving up and supporting price as we do so. Okay, so it's just healthily supporting price within that uptrend, and yeah, just a very, very nice ascent in price in terms of the delta dynamics on Ethereum. Okay, so Now we can move on to a few altcoins. Just going to get rid of some of these tabs as well. My computer's being pretty slow today for some reason. Okay. So let's see. I'll just skim through this weekly strength list, which is basically my watch list that comprises of the strongest markets on the higher time frames. Again, I'm always looking to align with the trend where possible. We are still in an uptrend. We are still in a bull market, although it may not feel like it. And I'm hunting for long setups. Okay, I want to align with the trend, not fade the trend wherever possible. So this weekly strength watch list helps me greatly in doing so. Okay, I'll just do a quick scan through, and we can talk about any markets that look particularly interesting. So arrow, potential deviation here in this area. Okay, so potential deviation here for arrow. What we want to see is this level, of course, hold, and then push to the upside. BNB, still a ridiculous market, still the strongest market out. Congratulations to anyone who's been trading this successfully. I'll hold my hands in the air and say I have not. Really and truly, my eyes should have been on this. Very easy to look back at charts with hindsight 2020 and go, I should have taken this trade, but yeah, a bit of regret on that side from my stance, really. And I spoke about, I believe it was a few weeks ago now, how I didn't take this trade either, and how I very much should have done so. Okay, so still learning lessons despite this many years in the game. As I always say to my students in the Discord, I am also an eternal student to the markets. Okay, so we're all in this together. I still learn tons, week on week, month on month, year on year. And yeah, I just hope to impart as much value to you guys as possible as I go through that learning process. Okay, H-bar. Gut tells me that this intra-demand zone here, which is cleanest on the 6 from 4, will hold. Okay. Let's see if we can meme on any trend lines here as well. But again, that's just pure gut and intuition. And yeah, we really want to see a break at this level. Even if we dip down into demand, let's say we take out this low, the real confirmation would be something like this. Okay. Hype, still almost 100% spot hype. And yeah, basically, I posted about this in the Discord as well, when we were looking to sort of capitalize on joining some of these downtrend triggers to the upside. You can see that we have taken out this low here, and we did so into origin demand. Okay, so we have a nice speed plus sweep plus demand. Was there a div in play as well? Yeah, plus a divergence. Okay, so yeah, let's mark this on. We've got speed, sweep, demand, divergence, very clean double divergence as well, and then we've got trend. Okay, so a really nice example and an illustration of how to use Confluence when trading. So we're joining this trend here. Okay, we know the strength of the trend on the higher time frames. Okay, hype is a raging market. We want to get in on this market. We want to ride the train to the upside. We get a decent pullback. Okay, let's see what the higher time frames look like at that point as well. We get an exact reset on the 3-day. A higher time frame reset. We have the sweep as price takes out this isolated low here with no real other lows to reach for. Okay, so the next distance between this low and the one underneath is over 12%. Okay, so a very healthy distance between this low and the next. And in between these lows, we have this pocket of 12-hour origin demand as well. Now, on the RSI and the awesome oscillator, we have that double agreement. Okay, as we make higher lows. As price makes lower lows. And I mean, this is pretty much as heavily confluenced a trade as you can get, really. Okay, so yeah, a really great illustration of confluence in the markets. If you haven't seen it already, then please run through my trading course where I run through all of these concepts with dedicated videos for each of them pretty much. And you can start to see how you can bolster and weave together some really strong trade theories together that you can then approach with confidence. With confidence comes size, and really benefit from the markets. So link, another potential deviation here. MNT in a very interesting market recently. Okay, so MNT, we know about the weekly breakout here. Apologies for my computer, no idea what's going on today. Got a custom built gaming unit worth over $5,000 and still doing this. I mean, okay, so MNT, yeah, weekly break here, right? So clean level, consolidation prior to the break, and now we're just raging upwards. Okay, so it's really about looking for entries. How can we join this train? Okay, how can we ride the momentum with this market? The only real trigger that's been given is this here. Okay. Sweep, SFP, push away. Okay, so on the 2-hour, there was an interesting breakout level in here. Right. But you can see that the execution of this and the sort of respect to this level has been very janky. So I've removed this, and essentially all we're doing here is just playing a market structure game at the moment. Okay. And yeah, so far here. Pengu, another potential sweep deviation in this area. Sol, great higher time frame chart, very strong indeed. Okay, so keeping eyes on Sol. Could actually mark this low out for a potential sweep. Syrup, again, potential deviation in this area. I'm looking at this this trend line here on Syrup, although I have my reservations about this trade, simply because we're moving in this wedge here, right? So we're moving in a sort of wedge here as opposed to a triangle, and I don't like these patterns as much. Okay, what I prefer to see is something like this. And as students of mine will know, I harp on about this all the time. The reason being is because we have ascending lows. Okay, so we have lows that complement the trade. Okay, so these lows are showing me the market is strong. It's another piece of confluence when I'm using diagonal breaks or even horizontal breaks. Whereas here we have the lows that are descending, not ascending. Okay, so not quite as appetizing. He's out a ridiculous market, but still haven't found a decent reason to enter. I was saying in the cord as well, if you are long this market, then do trail stops. Simply because we've seen a lot of markets that have been sort of ascending in this manner that look as, sort of stairway to heaven vibes, then just do this all out of nowhere recently. There's been multiple markets, Solaya, B, even XMR did it as well over here. Yeah, there's been many markets that have been printing this pattern, so make sure to trail your stops and protect yourself if you're in profits. XRP still looking good. I mememed this on yesterday as well. So again, to be honest, we're seeing an interaction here, so it's less of a meme now. The more interactions, the more credence we can administer to that level. Zora goes without saying, this line in the sand has to hold here. Okay, if we start losing this level, then it's probably lower down, and I'm going to be removing this from the strength watch list. ZEC has been, yeah, easily the most interesting market over the last few days. I mean, what is going on there? Does anybody actually know why this has gone completely vertical? This is just ridiculous. Even looking at the higher time frame charts, right? This is the weekly. I mean, what is going on here? Surely this is fundamental based in some manner. I refuse to believe this is purely organic and there's nothing news based or fundamental driving this. Does anybody know? No idea, but all privacy coins spiked at the same time. Fair enough. So daily, yeah, I mean, really and truly, anything under, above, sorry, the 4 hour is kind of redundant to look at because it's just been so sharp. So we do have to sort of dial down to the lower time frames here. Essentially what I've got here is really, we're going down to the 30 here. Okay, so 30-minute range. You can take it from here. Down to here. So very clean lower time frame range to work with. Any assiduous students of mine will know that when the strength of the trend is extreme, okay, so when we're dealing with very, very strong markets, I'm willing to bend and reduce my stringency and confluence for the trade. B, I'm willing to navigate down to the lower time frames as well. Okay, so happy to look at the 30-minute considering the recent strength of the trend here. So you can see that I've got an alert set down here and an alert, basically just the range highs and the range lows. I don't diddle in the middle of a range, especially on the lower time frame range. To be honest, I'd never take a mid-range trade regardless of the time frame. But looking for the interactions either to the downside or to the upside. Now we can look at this in a bit more detail than simply just a range high, mid-range and low of the range as well. So if we look at the low, we now have these stacked lows. Stacked lows mean that we have two lows next to each other, double stacked lows. You can also have triple stacked lows, quadruple stacked lows, etc., etc. But here we have this low, didn't quite take out this low, but it came very close. We created the stacked low. And essentially what that means is we've created this sort of magnet, okay? It's more likelihood for price to travel and sweep these levels. and the reason being is because there's likely more stop losses that are built up in this area, okay? And stop losses create this magnet, they attract price, where larger market participants manipulate price to move down into those regions of stop loss buildups, because those are points of liquidity buildups. Okay, the stops operate in hard stops operate in market form. Markets and limits interact with each other and get filled, vice versa. So if the larger participant wants to get filled in limit form, then they have to interact with markets, and stops are markets. Okay, so you do tend to see price revisit those stacked lows, stacked highs. Of course, we have the strength of the trend and the confluence, the fact that we are pro-trend in this area as well. That's not to say it's 100% going to happen, just going to say that I've got some alerts set down there. Okay, that's all. Again, I'm not bidding in this area. Okay, I want to see the reaction from price. Do we have speed? Do we have divergences? And in the case of trading altcoins, I do look at candle structure as well. So a nice green pin bar with a long wick tail would be nice to see in this area as well. Okay, that's to the downside. And to the upside, we have this area here. We take these bodies here all the way to here, and just mark it on like so, and remove this for now. Instead, do something like this. Okay, we can see that we have a nice breakout level to work with as well. Okay, so one touch point here, 2 touch points, 3. We can even slightly call this 4. Okay, but we have a nice level here with it's been respected well, good touch points in this area. That if price were to come up here, consolidate in this region, and then move away, this could be a potentially nice breakout trade. Okay, stop underneath consolidation, ride this higher, look at a simple 3R or whatever you want to do. Again, this would be the trigger to the downside, something like this here. Okay, in this case, monitor reaction at the highs. Okay, look for that consolidation to take place. So still look for that consolidation to take place, and do not add into this position here because it can completely skew your entry. Instead, just be grateful that you bought an early ride to this trade. Okay, so you can just squeeze more juice out of this trade. I'm always when I'm looking at triggers to the downside as opposed to trend side triggers, i.e. a breakout in an uptrend, I'm looking for stacked lows. I'm also looking for an overhead play in the works as well. So this is a very, very nice piece of price action to be looking at, and one that I'm keeping keen eyes on. Do you prefer trading breakouts or reversals? Just curious. I wouldn't say either or. Okay, so I have 2 systems. I've got a breakout system and a reversal system, and both of them are equally preferred, to be completely honest. It really depends on the strength of the trend, how much confluence comes together, the strength of the overall market as well, just to name just a few. So it's very, very hard to say which I prefer off the top of the dome. Neither. It's more about the details of the trade itself. Okay, so if you're looking at something like hype, for instance, and we run through how heavily confluenced this setup was, this isn't a breakout trade, this is a reversal trade, still in a very strong market, still joining it to the upside. If we're looking at the ZEC trade, and we're looking at taking this breakout trade, again, we're still riding a trend to the upside. Okay, so it doesn't mean that just because it's a reversal trade, we're taking a reversal fading a market. We're not fading this market, we're not fading hype. We're both riding them to the upside. We're just using different tactics and systems to do so. Okay, guys, we are approaching the hour here. So if you guys have any questions before I clock off, I'll let you type them now. If no one says anything, or if there aren't any questions, then have a lovely weekend. Yeah, no worries. Anytime. Always here for questions. And good to have you as well, as always. All right, guys. Enjoy your weekend. Have a nice time. I hope this market rundown has been useful to you all. The next video coming out on the channel is going to be a very important one. I want you all to watch it. It's taking one of I think the most impactful live streams that I've done in terms of how to build a bulletproof trading system and reformatting that into a much more intelligible video format in terms of a full form video with animations, etc. So please do watch that. It will greatly benefit all of you who aren't using gatekeeping, who aren't using Typeform, etc. And yeah, aside from that, remember about the BitUnix deal that you all have access to in terms of getting a free 30% trading margin on top of what you trade with. And yeah, I'll see you guys all next week. Same time, 10:30 in the morning, unless otherwise notified in the Discord, on Twitter, or in YouTube community posts. All right. Have a lovely weekend, guys. Take care.